Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, September 11th, 2018. In this video, I want to go over some of the things I'm watching right now that stand out. These will be either official, unofficial trade ideas and/or trade setups. So these are, some things worth watching right now. Again, some may be in play right now. Some may be a setup. A trade setup is simply a trade which has not yet triggered an objective entry, a potential trade, I should say. But let's start out here. I've probably seen more buzz, more chatter about gold and GDX lately. GDX is an official trade idea. Gold, call it unofficial, call it a sister trade. You know, if you're long one, you might as well be long the other. You just get more bang for your buck. GDX is more volatile than gold. But that trade hinges, as I've said, almost exclusively on what the euro US dollar does. So let's just focus on that again. So you have to have patience if you're trading this scenario, which is my scenario of a top in the US dollar, a bottom in the euro. Just to rehash it very quickly, because I've covered this chart quite a bit, what we had here is a bullish divergence, positive, strong positive divergence on the 60-minute chart. Um, Remember, this is looking at the dollar in reverse. The dollar had a huge rally. Bullishness hit extremes in the dollar, bearishness extremes in the euro. And what happened most recently, we had a very well watched support level here. A lot of reactions. I'm referring to this line right here, about where we're trading now, not too far from it. So that's point number one I wanted to mention. We are now back testing support. And what had happened is we had that brief fake down. This was a blow off top in the dollar. That was at what I called referred to as a bear trap scenario. The euro breaking down, bull trap scenario in the dollar, euro breaking down and then snapping back up and regaining that level. And then as we did that, so far everything is check, 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 all the check boxes. This was outlined, this potential scenario in advance, and we followed it all along. And then I had pointed out this downtrend line right here off the recent highs, or at least off this point right here, and that mentioning that as a resistance level. And we were quite overbought in the near term. So again, nothing has changed in the outlook for the euro US dollar. That doesn't mean that I'll be right on this call. It just means right now it's playing out fine. In fact, we've pulled back, you can see here, to that key level that was highlighted, so many times in the past. Look how many reactions. One, two, and these are daily candlesticks. One, two, three, four, five, and now we're just above it. So that support is holding. Obviously, I want to see that hold. If it breaks, is it the end of the world? No, but it certainly doesn't help the case for reversal. But as of now, support is support until unless broken. And again, we had some very near-term overbought conditions. We weren't overbought on this daily time frame. So right now, this scenario is in play. Here's that 60-minute chart of euro US dollar. Again, the pullback in the euro and the bounce in the dollar was anticipated with this. We had a bearish rising wedge here on the euro US dollar pair, negative divergences. That broke down and played out to my max downside swing target, which is right here. We've hit it once, and then we hit it again the other day. So, and that's again that same line, guys. By the way, there it is. So we're holding above support as of now, and so far so good. And what we need to do, I added a trend line here. I had this trend line here before, and as I added this one today, I noticed that it came in perfectly. It's parallel to this one, so that's really a price channel. Let's see if these trend lines are respected. This one was certainly respected back up to that point. We broke through it here, but now we're testing it again. But either way, the bigger picture here, although I have that blue trend line, it's been traded through a little bit. Let's just watch this level here, about 116,582. You can see these reactions here, several failures. It was support back here, it was support right here, it was broken, it was resistance there. So we need to take that out, and then of course take out that recent high, and then it should be smooth sailing in my opinion for the euro. And then gold and GDX will follow. That I can all but give you my word that if this plays out as such, gold and GDX will follow. For those of you not sure about that, here's a daily chart of the euro in green. Here, I'll change these colors here so you can see better. Let's make the euro white. There it is. Yeah, that doesn't help. Comparison gold. We'll do it. We'll just make gold magenta. There it is. All right. So now you can see this is 2 years. 2 years, nearly 2 years here, going back to early 2017. And again, don't look at the differential in prices. Look at the trend. When one goes up, the other goes down. So in other words, I'm sorry, they move in lockstep. This is a euro US dollar pair. So again, this is looking at the dollar in reverse. This gold is in the magenta color here. The euro US dollar is in white. So you can see when the euro is falling, it means the dollar is rising and gold's going down as well. So that's it. The correlation is unmistakable. When you see these, disconnects here, again, they don't move the same in percentage terms. I'm talking about gold and the euro or the dollar, but they do move the same in directional terms. So you just look at the price action. You see that move down, there it is, move down, move up, move down, up. So it's unmistakable. Again, I'm doing that for those of you that are new to my analysis, that have any question that gold, at least gold here, priced in the US and US dollars. If you're trading GLD, if you're trading the gold mining stocks, you want to watch the dollar. And again, I just like using this euro US dollar pair as a proxy, and especially when you do these overlays, because if I overlaid the US dollar and gold, you'll see one going up, the other going down. The chart's not as clear. And just a quick glance, and again, the success or failure of this GDX trade and/or the next one if they stop us out on this time around, because it's not far from it. I'll leave that stop right now on a daily close below 150. Here's the 60-minute chart of GDX. And again, we have some pretty strong divergences building here. Divergences aren't a buy signal, but they're certainly an indication that a trend reversal is likely. We can draw a minor downtrend line here. If you're not in GDX or you're in it and you want to add, here's a little minor downtrend line, so a little pop above this wedge here, probably bring us up to 1850, and then this is the first target on the trade. And if that scenario plays out that I just covered on the euro US dollar pair, if that begins to play out, I will most likely extend these to official targets. Now, what you see, this is the actual resistance level at 1945. I always set my sell limit orders just below resistance, so keep that in mind. If I make these official targets, the actual level will be a little bit below those resistance levels you see there, and that's GDX. Couple of long side trade ideas that stand out. I know I've been bearish on the broad markets recently, bullish on commodities, bullish on gold, bullish on bonds, but just not very fond right now of the broad markets. But there are always individual stocks that stand out. Here's one, Avis, symbol CAR. You had a divergent high right here. That divergent high led to a correction so far of about 41%. And we have a nice divergent low here. Not confirmed yet. Want to see a little more upside. That PPO will cross over, but so far so good. And this one I think is a bounce trade up to at least that 35.50ish level right there, and quite possibly up here to maybe about 38.50 all the way up to about 39, almost $40, and that's CAR. XHB I've been watching, not pulling the trigger yet on, but watching this one. There's pretty strong divergences here, right here at the recent lows. This is the Home Builders ETF, by the way. And here's a nice downtrend line to watch. So if it can pop above that downtrend line, those divergences might play out, and I could see this one carrying up here at least about $43. Not a huge gain. I wouldn't stay too long to the party on this one, but you could probably about a 5-6% run, maybe more, quite possibly more. We'll see. All depends on what the broad market does. That I can assure you. There's a lot of this has Home Depot, Lowe's, in addition to home builders, the home construction companies. So it will, be affected to some degree or another by the broad markets. IEF, just an update on this. This has been an active trade all the way since February 9th. So earlier this year, I haven't even populated all the dividends here. We had another one paid out in September already. So this trade is a lot more profitable than it looks here, because we've collected a lot of dividends. So if I adjusted the dividends instead of reducing the cost basis on this trade, another way to look at it, we bought it, we went in for at 102.30. If you add up all the dividends, they're up to almost a quarter a pop now, over 20 cents a pop. 1, 2, 3, 4, 5, 6, 7 dividends paid so far. So that's $1.40. So we're clearly profitable and would have already hit that second target. I believe, yeah, right about, if you add in the dividends again. So, and again, this isn't a get rich quick thing. You can overweight bonds. These are treasury bonds. And the sister trade to that was TLT. And point I wanted to make, they're both pulled back to support here. You can see support and right in the middle of the trading range. And what I'm referring to is, we have this trading range here on TLT. We had it back here. and there was a trading range right here. So we're at the midpoint of this trading range now. Sometimes that midpoint acts as support or resistance, as you can see here. So maybe an objective time. If you're looking, again, for those of you looking in your either your long-term accounts or even a trading account, you're not super aggressive, you're looking to add some diversity, asset allocation, I think that's not a bad place to be right now. Let's go and let's look at ITA. That one I need to update. I believe the stop was hit. I have to look at the details on that. I can't remember. Yeah, it must have been because I have a red line right here, but I still like it. And member Jeff V brought up something in the trading room yesterday. He mentioned, the short that we had recently on the casino stocks, how well that's played out. They continue to fall, and I posted a chart in the trading room saying, here's a long-term chart, and this is simple and effective stuff. I know there's a lot of frustration sometimes. I'll point out divergent highs and things that look like they're going to turn, or divergent lows, and sometimes those divergences take a while. Sometimes, not very often, but sometimes, I would say well under 10% of the time, probably less than 5% of the time, divergences don't play out and they get burned through. But more often than not, they do. You just have to be patient. Here's, BJK over the last decade, every divergent high, and you can see the corrections, all 20% or better corrections. This one, 21% so far. And I believe these divergences will play out in the tech stocks, semis, everything else that I've been highlighting. It's just they continue to build in the broad markets and everything else. So that's one trade. And then in that, Jeff V had mentioned ITA. You can see same big divergences here on the weekly time frame as well, which I believe will play out in time. In fact, they already have. When you look at the individual components, and I'm doing this because these are trade ideas. If you want to re-enter this trade, if you gave this trade a little more room, I think it'll come back in. There's Boeing. Boeing is poised to pop. Let me check something. Yeah, I wanted to check what they're doing in pre-market. They're at 337.89, so they might pop. They could break down today. Boeing could break down, I should say. There's that trend line right there to watch. We had a divergent high at this point, followed by a 16% drop, and I'm talking about right here, and followed by another divergent high. And so we need a break of that level, and particularly a break of that under 317. That should get the ball rolling on Boeing. And again, when I look at the long-term charts, this tells me there's a lot of downside, a lot more than I think most people believe in these defense stocks that are priced into the charts right now. So there's Boeing, and I'll just cover a few more if you want to look at individuals. UTX, there's a trend line, could trigger short on a break of. Lockheed Martin has already, that one's topped in my opinion, and has seen the highs. There was a divergent high here. I did a video a few months back when I added, right before I added this one, on mentioning it's a short here, or maybe it was on bounce back to one of these resistance levels, and that played out very well. That was a nice drop, and you can see it keeps hitting that resistance level, 326.10. It's at that level again. While I can't promise any trade will play out, I can promise this is objective to short a stock that has failed on numerous attempts at this resistance level. With support back here, support once broken becomes resistance. So you short it there with a stop not too far above 326, and for a swing down to, I think, this third target zone down here. And percentage wise, you're looking at a gain of about minimum 15%, maybe as much as 18-19%. So you can set a stop a couple percentage points up and give yourself a nice RR. GD, General Dynamics, same, very similar story here. I see a level here was resistance, support. Once that resistance was broken, support. You get the picture, support, and it's a zone. When I have two lines in close proximity, that's what I call a support or resistance zone. So there it is. We tried to take it up back here, failed, and we've been struggling with that level. If it does pop above it, you can see we have next resistance up there about 208.50. But if it fails here and the sector goes down as well, GD could have a lot more downside. Raytheon already peaked here with that divergent high. Same story, pushing up against resistance. So there's a lot of similar charts within these, and that's again because birds of a feather flock together. It's not mere coincidence. So there it is, Northrop Grumman, NOC, divergent high here, hit the primary trend line, bounced, broke the trend line, back tested the trend line, and it's moving lower. And again, it's the long-term chart that tells me the bigger picture on these stocks, that they're probably have probably put in a bull market top, in my opinion. FXB again, if you're looking for diversification, asset allocation, and currencies are a different type of asset. You have different various. You have stocks as an asset class, bonds as an asset class, commodities. You have currencies. You can put your money in if you're, especially if you're U.S. or citizen any other country besides the UK, you're going to have some diversity. I like the pound right now, and this is the ETF FXB, and that also plays into my scenario. I know that they are, not the euro. It's that's the UK decided not to go with the euro there, but the pound, this chart and the euro chart are probably going to play out very similar. Um, and again, you can go long the euro. FXE is a euro symbol, but on the currencies, just keep in mind that the gain potential isn't very large. So in other words, if FXB were to come up here to this target or this resistance level I have, and I'd have to give you really zero in on some price targets. I haven't taken time. Let's just put it right there and let me give you that number. But what I wanted to get at here is, the gain potential isn't huge, so you can take a little bit larger position size if you're trading currencies. That looks like a big move, but it's only about 4.5%. So you might want to overweight that if you decide to go with it. And let me move this line up just a little bit to cover where we're at now. There it is. So I wanted to revise that trend line. So we're right now at resistance. You want to wait for a break of that trend line, and that might trigger a long entry. And again, you had a divergent low right here recently in FXB, the Euro ETN. Let's see what's up next. I've mentioned GE recently. We had that as an active trade earlier in the year, hit the second target, came down and just clipped that stop after reversing off T2. So I have a couple different boards on it. We can look at it this way. Here's a downtrend line, and GE has really been flirting with this downtrend line. So as far as targets go, and we had a nice divergent low. I'm just trying to share both long and short trade ideas for you. I think this one's worth monitoring. If it breaks out here, I would say first target about 13.95, then target that T2 level again, 15.22, because that's where we reversed before, and then finally maybe up here around 17. And again, GE will probably be largely dependent on what the broad market does. Obviously, it hasn't been correlated. GE topped long before the broad market had its own problems. So is it possible we get a correction in the broad market and GE goes up? Yes, it's possible, but you tend to, when there's a correction in the market, you tend to see broad-based selling, and that could give some headwinds to this trade. But my job isn't to, put only long trade ideas if I'm bullish or short trade ideas if I'm bearish. It is to point out the most attractive long and short trades, and then let you guys decide which ones you want to take. So there's GE, and yeah, I think it looks good. But of course, needs to take out the top of that falling wedge, that breakout to trigger a long entry. Next up, SAFM. This is an active trade. Already hit the first target pretty quickly. It's a packaged foods company, Sanderson Farms. There's the downtrend line, the breakout. Seems to be, I wouldn't call that a bull flag, but it looks good. Every target level is an area I expect a reaction. That's why I list different targets. You can decide to take profits on the first target, cycle back in on a pullback, or you can just hold out for any of the additional targets if that's what you're doing, if that's your plan. But looks good for now. And there's a sister trade to that I posted because it's in the same industry, PPC, Pilgrim's Pride Packaged Foods. I posted this one. I can't remember if it was right here on support around 1721 or before it broke out of this wedge. Either way, it's moved up. You can see it's already hit my first target. Again, these are actual resistance levels if I don't list T2, T1, T2, etc. So you want to sell a little bit below the actual resistance level that you're targeting. So that one's effectively hit the first target and still looks good. It only just recently broke out. So T2 is up here and T3 is up there. Let's see. SRS is an active trade. That's the REIT short version, the 2 times short REIT ETF. and it's broken out of the wedge. Not impulsively. There's not any follow through. I think we're profitable on that. We should be because it's above the wedge or about break even, give or take. Can't be far from it. And there's IYR. IYR is just flirting with that trend line. But we still have the divergences. I think this one will play out. So I still like it at this time. Obviously, it would help to see a solid daily close below this trend line on IYR. To help that play out. IYR, by the way, is the one-time non-leveraged REIT ETF. Next up, I'll update shop. Not crazy about it right now because after it's broken down, I can't remember where our entry price was. Probably right around here because there's a breakdown, long-term trend line right there, and it's been moving sideways since. I still think the trade will pan out. This gives me a little bit of pause. In other words, if I didn't have this one on as a short trade idea, I wouldn't add it right now because usually on a breakdown you want to see impulsive selling, you want to see some follow through to the downside, but there it is. It's flirting with this resistance level I have here right now. Hasn't even really made a back test of the wedge other than immediately after the breakdown. So anyways, that's it. Trend indicators are bearish. Looks like we may get a bearish crossover here. So the bottom line, it needs to break below the bottom of that range right here, and that will open the door for a move down to the first and or second target, and maybe this potential third target. If this one starts to play out, I may extend that target or the final target on that trade. Kane, this is an official trade. Sugar ETN looking good. They sure tried to run at our stops, but they didn't get it. So it went on to break out above the bullish falling wedge, and it's just been strong, steady Eddie gainer day after day. And I wanted to point out that it has now, these are sugar futures, my preferred trading proxy. I put the ETFs on there for ETNs. You can also use SGGFF as a sugar ETF. But sugar futures have now they went ahead and they broke out of the downtrend line I was talking about, back tested. Then they took out this 1043 resistance level right here. That was bullish, and just like I said, a very steady advance in. Very bullish price action so far. However, I need to point out that we are at my first resistance zone. You can see a lot of reactions here, reactions here, reaction there, and so we're at the top of this resistance zone. So do you want to add to sugar now? No. If you're in it, I think there's more upside to come. Maybe a pullback, maybe not. And I'll tell you the thing about these commodities, sometimes when they go, they just keep on going. They move right on through resistance. They burn through divergences if a bottom is in sugar. And I'm starting to see some of the other commodities perk up as well. I'm talking about the ag commodities, agricultural commodities. And one of the proxies for that I've highlighted several times in recent weeks in the trading room and in some of the videos on the front page, DBA. If you don't want to mess around, you don't have the time or the inclination to trade individual commodities, right now I'm cherry picking those because it's been a tough, a lot of these commodities are beat down. They're in bear markets. And that's why Kane is the only official trade idea right now in the commodities arena, the ag commodities arena, that is. However, like I said, some of the other ones are starting to perk up here. And DBA is a way to get exposure. You have various ag commodities in DBA, and you can see it's starting to break out. Or I mentioned this yesterday, did break out of this bullish falling wedge pattern, nice divergent low. First target would be up here, right around 1770, 1760, somewhere in there. I should add another line. I think I had it when I did the video. And then, but I can see this one easily moving up here to 1835. At that point, probably get a reaction. That was a pretty significant level. That'd be about a 7% climb from here. But you can see it was support back in 2017, late 2017, then early in 2018. And once that support was broken, we had this washout move. And I think that's a final washout move in DBA. But when we come back to test that level again, it'll probably act as resistance. So, my forecasted path on this one, maybe a little hiccup there, but come up here to something like this. Maybe continue to base around for a while, maybe not. There's just been there's a lot of hot air in this market, and there's just a tremendous amount of liquidity. Despite the fact we've been in quantitative tightening mode, we're trying to take away that liquidity. we've taken away a tiny amount compared to what the Fed and all the central banks have injected into the financial markets in recent years. So my point is, and I've said this before, reiterate it in the trading room last night when someone asked about it. Yes, I think there will be all this liquidity sloshing around the financial system is going to have to find a home somewhere. Stocks are getting overvalued. They've been overvalued. They're getting extremely overvalued. And when that tide flows in the broad market, that money is going to have to find a home somewhere. And what are your options besides stocks? Well, you have bonds. Well, bonds aren't paying super hot rates. Rates are still very low, even though they've come off the bottom. And you have commodities, which are beat down, and I think they'll be the beneficiaries of a lot of that money flow. So we'll keep an eye on the commodities sector. And again, still early. But one worth watching, I think. And again, it's all about asset allocation, diversification. Here's an update. XLY has been an active trade for a while. This one, they're also testing the limits of our stop. I have a stop on, I think it's a daily close above 117.51 or any move, I can't recall. One of the two, that's why I have the line there, above 117.50. So any print of 117.51. Came close so far, but again, the story on XLY, just like gold, I could almost care less about the charts of gold. I care about the US dollar and the euro. With XLY, it's all about Amazon. Amazon's 25% a quarter this ETF right now, or 27%. It's about to become a third of this when they do the rebalancing at the end of this month. So it's all about Amazon. You guys have seen my posts and updates on Amazon recently. Same story. You got to break this trend line. Amazon breaks that trend line. XLY will break this trend line. So it's pushing the limits of that now. Whether you want to extend your stops or not, I think that a breakdown in Amazon is highly likely to happen soon. Can't guarantee it. Because like I say, support is support until and unless broken. And there it is. Been dancing on this support line for this trend line for a while. But so anyways, those two go hand in hand. And I still wanted to say I still think that trade has potential. It's just as far as the entry goes, in hindsight, I will admit I jumped the gun too early. I should have waited till Amazon broke down before shorting XLY. But I do think it will come. That reversal will come, whether or not it manages to punch up briefly above that stop or not. USO, I've covered this recently, but what I highlighted was, well, a lot of things. I cover the CL charts all the time in the trading room. I mean, 90+% of the coverage, or probably, yeah, close to 100, what I post in the trading room all day long. Charts on CL, crude futures, USO. But we had a bearish engulfing candle back there. It's a pretty high probability reversal candle, especially if you get a downside, some follow through the next day, another red candle. And as you can see from there, that did mark the top in crude, followed by a pretty sharp correction, which from the highs on that bearish reversing candle was about almost a 12% drop. Fast forward to last Tuesday, I believe it was, and I highlighted again, we had another bearish engulfing candlestick, engulfed the previous two candles, and we were followed up by 1, 2, 3, 4. Look at that, all red candles so far. So 4 red candles confirming that. And when I get a bearish engulfing candle, how do I trade them? I they're they're very reliable patterns. Nothing is 100%, but more often than not, they tend to work. And again, they need to come after an extended uptrend, not in the middle of if this one or wherever. If you went and found one here, it doesn't mean much. There's one right there. That's not after an extended uptrend, so that doesn't mean anything right there. This came after an extended uptrend right there, and anyway, so the way to trade them is when you get one, you can either short that day or the next day when you see a red candle forming, or it looks like you're going to get it, or you did get it right at the close. Just go ahead and short the security, whatever it is, whether it's a stock, an index ETF. Set a stop just above the top of that bearish candle, because if they take it out, then they've undone it. They've negated the bearish implications, and your downside is minimal. If you short with a stop above that candle. Whereas again, these are topping candlesticks. They're not just in this case, you could have certainly just done a short-term trade, but now at this point, we moved down quite a bit. Do you short here? You could, but I'd have to look at the 60-minute chart. I didn't really plan to do that. I don't want to get off. Excuse me. I just wanted to do an update on this. Also note here that we have a pending. It's not yet happened, and sometimes you get a whipsaw signal. Sometimes the lines bounce, but you have a pending bearish PPO crossover there on US. And another somewhat related commodity, natural gas. This was pointed out in the trading room in the last week or so, highlighting this bullish falling wedge pattern and this 2756 support level. You can see it goes all the way back here. A lot of reactions off that level. So what did we have? We had a breakout yesterday, maybe in Sunday night's trading session or the overnight session or early into Monday, but it was a very lackluster breakout. But then we pulled back, kissed that level, which was nice. It's always nice to see a support level get touched instead of coming close and just missing it, because sometimes the security wants to come back in and hit that level, in which case we did. So that no unfinished business, in my opinion. We had a very impulsive move up yesterday. We consolidated a little bit. This wasn't flagging action. Flagging action is actually like this when you go down. This would have been, well, let's forget about that. It started out as a potential pennant, but we didn't have a bull flag that would have gone down like that. We just had this upward side consolidation. Fell out of it so far this morning. We had a little thrust down, but as long as nat gas holds above this 2775 level, I think it looks good. And this is a volatile commodity. If you're trading it, just know that you need to expect, high single digit gains. I've even seen nat gas move double digits in a single day. So it's a volatile little sucker, you can see here from all these candlesticks. So you just got to give it a little room. But if you bought it, and I know several of you did yesterday, congrats. Don't fall in love with it like anything else. Sometimes the chart looks good and doesn't play out. So I gave you some levels to watch. Ideally, nat gas should hold above here, and maybe on a pullback might offer another objective entry. But to me, after this little jog down today, the sooner we reverse, the better. And I think the potential's there. 2.847, 2.875, and possibly up to 290 right there. Swing targets on that gas, and these are the futures. If you want, you can use UGAZ. This is UGAZ. You can see bullish divergence right there. Fell to that 55.51 support and it's moving up so far. And these are all potential. The green lines are potential to actually. This one could come all the way up here, possibly to 68.92. Any or all of these levels. But right now, looking good so far. And by the way, this doesn't reflect the jog down yet because this is an ETF that has not started, or ETN that has not started trading yet as I'm doing this video. So that's going to come down a little bit today as futures have fallen. So you might get another buying up there. Tesla, not much more to say. I think this company's done, at least for the time being. There was a big pop yesterday. We just now opened. There was a big pop yesterday and took us right back. Again, these were all levels I had on this chart in advance. 286.40 was a resistance level. Ran up to hit a high of 286.03, close enough, and then reversed. So this one bounced back into resistance yesterday. It's down again today, and I still favor a move down here to at least this 244.35-ish level. And at that point, I'll be covering. But I think the longer-term picture outlook for Tesla is pretty ugly, especially if it gets down to that level. AMD, one of many semis that look ripe for a pullback here. And this is a 60-minute chart, bearish rising wedge. Replicate this trend line. Use log scaling. Targets 2412, 2016. Those are unadjusted targets, actual support levels where I think AMD is going in the near term. Daily chart, it's just, looks like somebody lit a fire under this one. But again, parabolic runs like this usually don't end well. Looks like a buying climax in my opinion. So again, just hone in on the 60-minute charts if you're looking for an entry. Now, we haven't broken yet. We don't have any type of sell signal. Sell signal comes on a break. This is a trade setup, not an active trade, and it's unofficial as of this time. But there's your sell signal on a break of that trend line. Oh, okay. Let's wrap it up here. I meant to cover when I covered the euro and talked on gold and GDX. I also should have mentioned I like platinum. I mentioned this in the trading room. Posted this chart yesterday or the day before. What I'm looking at is nice divergent low. See the bullish divergence in place right here, just like you had divergent lows back here, here, and here. Boom, boom, boom. You can see those were nice rallies. This one didn't play out for too much, but a little bit of a pop. But we had a big, strong divergent low there. 75.90-ish. That's a level I'm watching. That's a resistance level. Once we pop above there, next buy signal would be a break above this trend line, and these are near-term targets, and I prefer, this is my preferred swing target right now, 83.50ish right there. And again, the success or failure of this trade or trade in platinum will hinge largely on, if not exclusively on that euro US dollar scenario that I laid out earlier in the video. Okay, long video, but I wanted to get these trade ideas out. Again, things that I'm watching. I didn't touch on the broad markets here because I've covered that extensively in other videos. And again, I'll do an update on the broad markets today if anything interesting happens. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed.